Hello everyone, welcome back to my channel. So this video marks the end of the week number 81 in this road to 100k realized return challenge, and this was yet another roller coaster of a week. We have a lot to unpack here, as has been every so often over the past couple of weeks, and this was a negative week for the markets overall. Many things have happened, so yeah, we'll just go straight into it. So to start the week, and looking here, there was some Fed speak, but nothing came about it. And we have already covered what happened on Monday during our past video. Yeah, the first sign of things to come towards the end of the week actually came in the form of retail sales being completely flat, even if you discount the automobiles, which are considered a little bit more volatile component of retail sales. So even discounting these, retail sales remained flat month over month for December. This prompted some some fall of the yields, because with data like this, there would be an increased expectation that the Fed may have to intervene and lower interest rates further to foster consumption in the economy. But still, this was something that it's not that important relative to the other data that was to come over the week. But this was one of the big highlights of the week, was the employment, the US jobs report. And amazingly, so for January, 130,000 jobs were created according to the report. And not only that, the unemployment rate ticked lower by 0.1 percentage points. And so on the at a first glance, this looks like very good news. And the markets, if we look here at what happened to the Qs over the course of the week, as you can see here, when the data was released, there was this big gap up, but then as investors digested the information about the report itself, things then came abruptly downhill. And the reason for that is because, having a closer look at the data, first of all, by having these many jobs being created, of course, this cools down the expectations that the Fed may lower interest rates by the next meeting, which will take place on March 18th. All right, but not only that, we have to take this data with a grain of salt, and the big one, because now these jobs were created for January, all right, but then there was also the news that there was a slight downward revision of the jobs data in December, as has been the case, and it's already reflected in here, as has been the case for every single month of 2025. Every time jobs data are released, the jobs data of the months prior are downgraded, are revised down. And so, never mind what the current tenant of the White House said, this is absolutely delirious, not to say anything further than that, because it's ludicrous. But making a deep dive into the data, you see here that of those apparently and provisionally 130,000 jobs created, healthcare added 80,000 jobs, 82,000 jobs. Social assistance also 42,000. And these sectors, let's just say it this way, are not the most value added jobs that can be created in an economy, because healthcare, yeah, is basically taking care of the people. So it, it does not add value, economic value to the economy, other than keeping the people healthy. But it does not create more stuff. It doesn't provide any further services down the line, down the value chain. So there is nothing really in terms of real value adding to the economy for these kind of jobs. Now, construction saw a gain, all right, of 33,000. This is a positive development, all right, and this is good. But job categories posted losses. Federal government jobs fell by 34,000. All right, so this is also a good thing, because that makes that shows a tendency for the state to lower its overhead. All right, but this is also a bad one. Decline in jobs of 22,000 in financial activities, and so things are not going well, I would say, overall, because the most jobs created are in the sectors that are not that significant in the economy overall, and apparently the ones among the sectors that are most value added, construction is apparently was the top one, which is a good sign, but only 33,000, and several categories which are not discriminated here, all of them, but posted losses. And so this data is not as good as it could have been, but also we have to expect that, or we may expect the possibility that when the jobs report for February is released, probably, as it always happened in the past couple of months, the jobs data for January will be revised down again. And so that is probably the biggest reason why the jobs came down, because of course 130,000 jobs as a headline is good, but then when you see what jobs are created, maybe it's not that good of a news. And so that is why this probably this big reaction came. Now, moving ahead, jobless claims, I would say this not caused much of an impact, because this came in line, more or less in line with the expectations. By the way, one particular detail that I want to say about the jobs report is that the unemployment rate, as I mentioned here, came down from 4.4% to 4.3%, but this happened as the participation rate edged higher to 62,000%. This is important because this means that the employment rate came down despite the participation rate increased. So this means that actual jobs were created, because you can lower the unemployment rate if you drop the labor participation rate down, because less people are looking for a job, and so they don't count for the unemployment rate. But if more people are looking for a job, they count for the unemployment rate. So the combination of lower unemployment and a higher participation rate, that means that actually, indeed, more people are found a job and is now working, which is, of course, a good thing. Now, when it comes to the jobless claims, I don't think there was much of an effect. This situation here probably is due to it, but I would not say that this was the actual cause of this was the actual effect of the jobless claims. This was mostly a systemic rotation away from AI and tech companies to other sectors, especially because if we look here, yeah, this also happened in the IWM. So this was pretty much something was, general across the sectors, but this was I think more of a bad sentiment in the market than because of specifically this number. Now, on Friday, we had the other side of the Fed's mandate after the jobs report, which was the consumer price index. This came as a good surprise because on the headline basis, the data came the inflation came slightly cooler than expected, so 0.2 month on month, and for the year 2.4, right? And this was probably the reason why the market staged a comeback here on Friday, right? And this was a good thing, which even though died down and yeah, lost steam some way in the middle of the session, but still, this was a good thing. Uh, Even though I don't agree with this. It didn't help the outlook for the Federal Reserve rate cuts in the futures market, as you can see here, looking at the Fed fund futures. The bets are mostly pointing towards the Fed maintaining interest rates here at the current level on the meeting on March the 18th. And so, looking at the inflation data, the core component came exactly as expected, all right, 0.3 month on month and 2.5 year over year, right? And this was, as you can see here, a slight increase from the previous month on the month on month, even though year over year was a slight reduction. The biggest reductions were here over year on the headline, and again a slight reduction month on month for the headline month on month. So here these were good news, but still this also comes into the context probably of the fact that yeah, retail sales here on Monday actually uh, on Tuesday became mostly flat, and so but still is above target, and so I would not bet that the Fed will continue to lower rates for the time being in the next few meetings, even though markets are expecting 2 rate cuts for the rest of the year. Now, when it comes to the market itself, and focusing mostly on the Qs because the Qs are the ones that we have the biggest position. As you can see, it ended the week lower, just like it happened with the IWM, but slightly so. It it ended the week very ever so slightly lower than expected, lower than the beginning of the week. But yeah, this was a bad week overall for the market, despite having some data points which were positive. And so, as you recall from the last video that I did, we were not able to sell the or to fill out the order we had for the 5 calls on the Qs expiring on Friday, and so we were forced to try to fill in our order on Tuesday, which we did, but because the market started to come down at the time, here you can see the Qs on Tuesday, the market started to drifting further and further down, and so because of that we were not able to fill our order as we wanted for Friday, because the premiums provided by the calls were losing value very quickly. And so I decided to extend the maturity a little bit more to get a little bit more premium out of it. And since the market will be closed on Monday, February the 16th, I decided to sell the calls for the next business day in which the market is open, which is Tuesday, February the 17th. And so, as you can see here, these calls are already worth yeah, almost nothing, because we should not expect a 30-point swing in the market in the Qs for these calls to be exercised, and so they no longer hold any value. Probably we'll buy these back, or yeah, in order to get some value out of it. But yeah, we will see. When it comes to the IWM, is a completely different matter, because that actually, as you recall, I sold the 266 calls, which were equal to our cost basis here, as you can see. All right, and at the beginning of the week, I was already considering that probably we had left some money on the table, because here the market continued to drift higher and higher, and they were at some point 268.5, so the calls were extremely valuable. All right, but then uh, in the context of the news that we receive, the calls, as these large downswings took place, the calls lost a lot of value, and they ended up never recovering, even though they got close to the strike price here at some point. And I was wondering, well, probably they will be exercised by the end of Friday, but ended up not being the case, and so they expire worthless, as you can see here. And yes, they are here, and so nothing came of it. We keep the shares, and we will now proceed to sell more calls in the next week on Tuesday. Now, the the calls that we had sold on ARKK the previous week, the previous week, as you can see also here, they expired without value, because the strike price was 75.5. They never got close to that, as you can see here, the graph for the week. This is also extremely volatile, as you can see, but here at some point they got somewhat close, but yeah, after what panned out for the rest of the week, they never even got close to the 75.5, and so by this time they were already yeah, worthless basically. And so I decided to let them die down. But with the initial cash that we were receiving from the premiums and all that, I decided to sell a put expiring for the end of next week, so next Friday, with a 63.5 strike price. And why is that? Because having 300 shares, as you can see here, 300 shares at having bought them at 75.5, if we add 100 shares bought at 63.5, and we divide this by the 400 shares that we would have if this put is assigned, we will end up with an average price of 72.5. And so if this put ends up being assigned, and we buy those 100 shares of ARKK at 63.5, we will be able from that point onwards to sell calls on ARKK for 72.5 and break even on price. So this will decrease our cost basis in a good way, in a I would say quite significant way, and so we would be able then to get more premium and a bigger likelihood of sell the entire thing, the entire 400 shares, more easily. Now, for the next week, I think, given this price to 63.01, we will probably sell again shares, or the two calls at 266, which is our cost basis. Try to get rid of this as soon as possible. And yeah, we will continue with these calls probably, but then, given the fact that we have data coming up next week as well, so nothing here. Probably delayed goods, the durable goods may have here something, even though it's a delayed report, so I don't see this moving the market too much. Jobless claims may have something here. And then on Friday, we have the PCE coming, so the personal consumption expenditures. Now, this is a bit different from the CPI because this actually tracks the actual consumption behavior of the consumer, while the CPI is based on a set uh, uh, a set range of goods, a specific range of goods, basket of goods. That's the expression. While here, the actual consumption of the consumers is tracked, and so this is for this December, but still, this may is likely to move the market, and so the calls that we will sell most likely will be sold for Friday to capture the volatility that will come with this release of this data. And so yeah, this is pretty much it. We are getting to the end of it. So now let's see. So these are the two yeah, I think these are the two set of options that we have expired this week. Yeah, they are KK and IWM. All right, so based on this, we managed to get so a little bit over 640. So this was a very, very poor week for us, and probably the next week will be in the same way unless something significant happens, because the Qs, which is our main source of premiums at this point, the Qs are a long way away from the 630 cost basis, and so we will be getting small premiums for this. But again, as I mentioned before, at the moment we are outperforming the market because while the market continues to go up and down, we are also going up and down with our shares, but we are collecting some income from the premium. So we are getting better returns than simply someone else who holds the shares and does nothing with them. And so we managed to bring down our cost base for the IWM shares to 260 and a half, a little bit more than that. And these shares of ARKK currently have a price, a cost basis of 74. I think for the Qs we are around 611 and a half, so almost $19 per share, and that means that it's almost $10,000 that we already received in premiums from these shares. So yeah, over the past three months and a half, give or take. So yeah, could be better, but it is what it is. So yes, now I think we focused on everything except the last thing that I wanted to show. This is also important because these are the earnings for next week. I've already had a brief review of these. There are a few companies, only very few companies that are important here. I think there is somewhere here Palo Alto, which is a company that is likely, because it's a tech company, is likely to move the market. Yeah, it's here, Palo Alto. Also, I think I saw somewhere Walmart also reporting. Glencore. This may also give some moves to the market, even though, yeah, it's in the energy sector. Let's see, but I think I saw Walmart here somewhere. Let's see, also Occidental Petroleum. So this also in the energy sector. This may also have some move in the market. let's see, almost probably. So this is Wednesday. Let's see on Thursday. Airbus, semiconductor industries. Who knows? Maybe. Let's see. Let's see. Walmart. Here is. It's Walmart. So this is on Thursday. So this may also move the market, especially the S&P 500. And I think this is pretty much it for the companies that are likely to move the market. Fidelity for financials. This may also have make some moves in the financial sector. Let's see, yeah, but I think this is pretty much it. Another company of semiconductors here also, but usually on Friday nothing really significant happens. No, Western Union maybe, but this is also another financial, so yeah, we'll see. For the time being, yeah, I think this is pretty much it. Now, feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions. And as always, feel free to like the video and subscribe to the channel. And we'll reconvene either on Tuesday evening or on Wednesday morning to start the week number 82 of this challenge. A week that will have only 4 trading days, because Monday the market will be closed. And yeah, I'll see you there.